Ira Epstein with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, the 3rd of October, 2022. Right out as the market opened, things were moving up rather sharply today. Started with the energy complex, which OPEC Plus is due to meet on Wednesday. They've made it known that they're seriously considering 500,000 to a 1 million barrel rate production, not rate, but quota production cut. Who it'll impact, I really don't know who's going to take that on the chin. Remember, there's many that don't even hit their quota, so I don't know how that's going to work and what all the politics are with that. 1 million barrels seems like a lot to me at one time, but they are calling a meeting in person. They haven't had a meeting in 2 years in person. And you can't tell me it's all COVID. I mean, the world is adjusted to COVID with the exception of China. And with that, they could have been meeting in person. So I don't know. And I would have thought 200,000-300,000 barrels. Well, that's thrown out the window from what I can see. So how radical do they want to get, and how much of the ire of the world do they want to take? Remember, 1 million barrels a day, they're driving prices up in an inflationary environment. Russia, Ukraine, are they siding with Russia to drive the prices up to help Russia fund the war against Ukraine? There's so many countervailing forces at work here. I don't know what they're going to decide. But a production cut is coming, and that's what you look at. But that wasn't the biggest force. The biggest force is how people are thinking. The ISM data, the market came out today for manufacturing. It's normally not a super important report. Gives you an idea how the economy is doing. But in this market, everybody is fixated on, have the Fed gone far enough where we're starting to see report upon report get bad? Bad is good for the stock market. Why? It means the Fed can end earlier rather than later with the rate hikes. Does that make sense to you? Because that's what's going on. So we had a bad set of numbers from that. As soon as you had that, it was bad. Then we had construction spending. It came in twice as poor as the market was looking for. That combination got people saying, oh, inflation, it seems to be dropping. Well, number one, that is not the case. What is the case so far, because these are not inflation reports, they're productivity reports. And people are pulling back because of the high price of money. Now, will that lower core inflation? That's going to be the question we have to look at. But when I was watching CNBC, no more than, just about right after 4 o'clock, they're talking about inflation. How do we know what inflation has done yet? I think that's a stretch from point A to Z that they jumped on. They could be right. They could be very wrong. I think we want to see that. So where are we for the week? Because now we'll sum it up. Well, first off, I'm having a live webinar this coming Thursday at 12:30. It's 20 minutes long. It is invitation only. Your invites were sent. The Johnny-come-latelys that don't go to our website and sign up for anything, I'll give it to you in a day or so where you can come on this and sign up there. We are getting a lot of people signing up. We filled up on the last one. It is free. You get to ask all the questions, and ideally, SPDR's ETF stock questions. When you sign up, you'll see that when we send you back your user ID and your password, there's an area right in that says, click here to send me the questions you want me to answer. I create the charts. I've already done a lot of them today. So it's filling up, as I said, nicely, and we'll see what goes on there. But where I was headed before that was this is a week where we get the JOLTS ads data. Remember what that is. That's when you look at the amount of ads that are out there versus the workforce to see how intent are the companies to hire workers still. Are we going to see that number slip? That's what the Fed wants to see. Second thing, we get the jobs data this week. So that's going to be very important. Has the Fed taken up interest rates enough to hurt demand, just like we saw in manufacturing, where then we see that the jobs, instead of stellar growth, it starts shrinking away. I expect growth. The market's looking for 250,000 jobs. So that's your baseline at this point in time. The other reports that we're going to get shortly are going to be the CPI numbers. So between the jobs, the CPI, in October, That sets us up for the November numbers, and then we look to see what day is the FOMC meeting. Do these reports come out before that? I'll discuss that with you at another time, okay? So I decided to look at Goldman Sachs. Why? Because it's gotten hit hard. It has come down a third, roughly. It was near 360. It got down into the 288 level, right? So that's nearly an $80 break in round figures. You're sort of going sideways right here. The market's not trending. You have a lower low, higher high scenario that is not a trend. You had a bearish crossover today. What is a bearish crossover? So let me show you this. Here is the market on Friday. You do see that the 18-day average is over the green, which is the 100. Today, you had what's called a crossover. So on that crossover, you now have the shorter term average, the 18, under the green, which is the 100, and the green under the gray, the 200. So you have a bear market lineup. What else do you have? Should the market catch on fire, that this jobs data and everything is favorable and everything lifts, high tide carries everything, you have your resistance area where the market's looking. What about support? Well, you just came off of it. You had broken hard and you're going sideways. So this is your support zone. If the market decides to get back under this 281.55, well, then you look, 291.55, then I think you're looking at the lower Bollinger Band again. And let me give you something that's super important. Momentum leads price. You're going sideways. You're still embedded. What is embedded? The slow stochastic is made up of two lines, a K and a D line. The formula is basically this identical for both lines. One of them's using 5 days of time, the other 3 on a daily chart. On a 15-minute chart, 5 15-minute periods versus 3 15. On a weekly chart, 5 weeks versus 3. My numbers won't look quite like yours because I went in and modified the formula internally, and every one of my paid subscribers all they got to do is write me, and I send them the formula. They go in and they modify it. I found years ago that, be it slow stochastics, other tools, you can go in and sometimes you can create a better mousetrap. I think I did. That doesn't mean I'm right. You can keep it the old way, but this is how I'm going to run it. So until the red line closes over 21, rallies are, in theory, being sold by the pros. Now, you close near the day's high, not too far off of it, but you're not knocking on 20 even at this level. Remember, I said you got to close over 21. So on a day like today, yes, you're up your 2%, but I would not be surprised that you see selling try to knock the market back down tomorrow, especially if you lift up a little bit. That's where I think the pros will do it. In my enhanced Bollinger Band course, I teach you how to do this. There's a moving average that I don't show here. That is the number that I think the pros will look at. And we cover it every morning in my subscriber video. And by the way, on my subscriber video, my subscribers know it because they see it. This morning, I think I started recording 9:10 in the morning, something like that. I let the first half hour go by. There were 2 big reports. I had to get the construction and the ISM, and that changes a pattern called a window envelope, which is, some people use standard deviations from an 18-day average. I use my swing lines to determine where support and resistance are, and then I give my people the numbers. So I did that, and I began recording. And what they heard me saying was they had been short on these rallies just recently, and I was telling them to come out of market upon market on chunks of what they had. But they had covered half on this break last week, and now they're coming out of the rest. Did I have a few losers? Of course. Nobody wins every trade. Get serious about that. I was dead wrong in XME, but got out, I think it was Thursday or Friday, and that helped me. I wasn't right, but I had covered half the position much earlier with a very small profit, talking 80 cents on that. But can you get caught? Who can't? When you trade, you have to understand that there's always a pothole waiting for you to do something wrong. Just remember that. That's just how it works. In Netflix, everybody's looking to see how does their new programming work in terms of ads. In addition, games. So this is a company that's trying to reinvent itself smartly, trying to use its base here to work from, and can it to come up with something where people say, hey, I want to do that. I think cutting their price of Netflix will be very smart. They've been experimenting with ways, as you know, that if you give your family members your user ID and password, that they'll be able to track that and earn some income off of it, but yet you're not going to buy your family another full subscription. Very smart on their part. People love Netflix, they love Hulu. These companies have to work with all that. When we come to Apple, the market had spent 2 days underneath the lower band. Now, you only stay out of a Bollinger Band, if I step over with you, 5% of the time. Something big happens in a market, you can get a streak to the downside, but 5% of the time you're going to be out of it. The algorithm will adjust to price. Well, the market just pulled back in it. Is there a change here? None. What else is on the chart staring you in the face? Just like in Goldman Sachs, you're now getting this 18-day average attacking the 100. It can flip under it. Then again, here's your 200-day, here's your 18, here's your 100. Line them up bearish, you could still be going down. I had told you before, I have a piece of work still on the weekly chart says you could get to the 130 level to take everything down. Which brings me to this. This rally we're getting today, is this a trade bottom? You never know, but do I think so? No. I think that we still have to get through the point of sticky inflation and how far the Fed goes to break the stickiness. They need some glue be gone, right? To get rid of that. In Disney, does this look to you like a market that's doing very well? Not yet. By the way, did you look at the movie theaters this week? Smile, and then there was, I think, Brothers. The top producer was $22 million. The second was $5 million. You can't run a movie theater on those numbers. And I realize, I keep telling you, I'm not covering AMC right now, but I see the kiss of death. These guys got to figure out how to survive to Christmas, hope they get a great Christmas to then survive into the spring, because they're not making money. They're burning money right now at a fast clip. Be careful here. Okay, and you're not seeing anything stellar here just yet, right? So I'd be cautious. It's still bearish. It's got an embedded reading. I think the pros want to sell it. And even if you lose the embedded reading, I think everybody's going to look at this. The 18 is getting under the 100. It'll cross tomorrow. And that's underneath the 2. So you still have your classic bear settings. Even if the market puts on a nice rally, that's going to be, I think, a resistance point in the marketplace. In XLF, you are knocking on the door of losing the embedded reading. When you open in the morning, a steady opening, the way that slow stochastics work, you'll have a reading over 21. So danger, danger, danger right here. This could be a market that wants to lift a bit, could get back to the 18-day average if it loses the embedded reading. Not a market that I'm keen on being short right now. XLI, still bearish, didn't lose its embedded reading, unlike what we just looked at right here, XLF, with a reading of nearly 19, the reading here is a lot less. It's 1575. It's probably going to get sold in the morning. And the pros will see, does it break it all, or are buyers willing to take it over? And then if they start taking it back up after that, that's when the pros will run, because this number will start moving on you. So you want to watch that number in the play. To me, it's second nature. I've watched this so many years. XSD, the semiconductors, okay, you close near the high. You're going to lose that embedded reading. It's going to be over 21, I'd say, right on the opening. It could be 22, 23, the way it's going to pop. And that's putting in the play, getting back up, in my opinion, at least the 18-day average of closes. But to get there, you have to get through right here, 160.54, which means you'll break the downtrend. You'll finally have broken this level where you're just going back and forth. You did it once before. You did it there when you came from this low, and then you fell again. So far, I'm not seeing any reason to think it won't fall again afterwards. The automakers that can get semiconductors are able to make more cars. The problem is they're not getting enough semiconductors yet, and that's what they need. In the home builders, we had talked about if you lost the embedded reading, which you did. I'm just going to walk you into this right through here, right to that point. Okay, you're fully embedded. You can see that you've got it. The next day you stay embedded. You're still embedded, right? Now, right here today, what happened? You lose the embedded reading. It means price and the 18-day average, they're virtually on top of each other, will probably tomorrow hit. What did you do in the energy market? Back here, I'll take you to it. You lost the embedded reading. This is classic what I teach, by the way. So if you're looking to really learn, this is part of it. You're fully embedded. You get a 2194 reading. I'm going to tell you that I think price and the first, the 100-day average, that should be a lockup where prices go there, and maybe you get to the 18-day average of closes. That's what you're hoping to see. Here's the market on Friday. Still lost the embedded reading, and the news over the weekend jolts the market right on up, gaps the 200-day goes right there, and this should be where the market now has some problems. So while all the energies were up, you're back to the spot from a bear market rally and no more than that. I cannot say this is the beginning of a bull market. This is that first spot, that pop in it. You did the same in gold. You had an embedded reading you lost. You went to the 18-day average. You never did embed in GDX. You probably got resistance at the upper Bollinger Band, and the market's saying it's caught in this gyration right here. Does it look like a trend to you? Not to me. I'm not seeing that. Copper, let's take a look. So here's copper, and we come in and we just back up a day or two so we get a clean picture. You had hit the lower Bollinger Band. I told you, I know I did, that's where I think pros cover shorts. And now we've got the People's Party Congress coming up on the 16th of October. Over the weekend, companies such as JP Morgan, Chase, they were all told, if you're going to do reviews, you're not to mention politics in any manner, any criticism, you can lose your banking license. I don't make this stuff up. I wrote about it. I have the sources. It was on the news. That's what they do. They're getting ready for their gala event. Well, is that going to be bearish copper? I don't think so. What's the Chinese trying to do? Well, they're trying to, as you know, build infrastructure. They have a nightmare in their housing. They got to figure a way out of it, and they got to spend some money. So I wouldn't expect to be bearish copper in front of that meeting. It's all that I'm saying. Who consumes 50% of the world's copper? China. When we get to TLT, well, you lost your embedded reading all the way back here. You haven't yet gotten to the 18-day average. I think it will, but let me tell you, that's not how I thought it would happen. I thought back here it'd get up there quicker. That did not happen the way that I thought. Now in the dollar, you lost your embedded reading a few days ago. And this is what I love about the techniques that I teach and how to do them, but you need the settings I have. I think you're going to the 18-day average. You can no longer be long. And you look at that chart and say, well, just a pullback in a bull market. And I'm going, I think it's more than that. And I still do. Okay, I think there's more correction that can come on there. And the flip-flop is then true to a degree in the FXC because this occupies what? 40% of the dollar index is made up of the euro. So that's what you have to watch, and you play it accordingly. So you put it all together, you're trying to come up with game plans that might work out for you. Where do you go with it? And you take it a step at a time. We just came off a terrible quarter. Window dressing, everything else taking place. New money moves in when? New money moves in on the first day of a new quarter. I was a stockbroker, owned a stock firm, used to it happening. There's certain events that happen all the time. Money gets put in for this quarter and away you go. Is this typically a strong quarter? Not at the beginning. It's typically weak at the beginning, strong at the end. That Santa Claus rally, will we get it? I've heard stories both ways. You will and you won't get it. I play the norms. I'm counting that it will happen, and I am still playing you're going to get your bear market rallies and then your pullbacks just as you always do. No surprise to me at all. I want to remind you that you hear me talking about my morning Spider ETF video, which is just what this is. I stick my neck out a country mile. Win, lose, draw. Buy here, sell there, go at the market or put in a price order. Here's a stop. Here's how I want you out at the end of the day. When you look at all this example, these will change all the time. I'm forever adding and subtracting different markets as people write me or what they want or where the action is changing. On the weekends, I'm doing a spider video. Now I'm going to start doing, as I promised you, my bonus videos for spiders. I haven't done one yet. I'm about to now. And you'll get the trade ideas. You're spending more probably on 2 days coffee wherever you're buying coffee outside than this is going to cost you for the whole 24-day period. You get 24 videos from me, each one about 15-minute long, very specific. I start you off with the day's market information, what reports are coming out, the reactions to them, what I think events you got to pay attention to, and then we go through about 40 charts. It's done in such a way that on the bottom on our website, you're able to scroll it, and if you want to go to an area of just stocks, an area of the energies, an area of the bonds, it's all labeled for you so you don't have to waste time. I think you'll find it very interesting. And you're entitled then to my bonus videos, which, as you know, I just did one on stock indices. By the way, how bad does that look for those of you that looked at it? On the money. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow. Take care.